Uh-oh, we have a big problem. And this pattern says that stocks might be on the edge of a cliff and we might be about to go big down, bounce off the 50-day moving average, and then big crash. Is that what's happening here? Because right now people are fearful. And what's been happening to these Magnificent Seven, these studs? Because recently they've been less than magnificent. They've been pretty bad. Let's just use that word, bad, right? They're not good. They're going down, and they're going down fast. So what exactly is happening? Because stocks skid at end of best S&P run since the 1990s. Markets wrap. But in today's video, I said more than $1 trillion have been deleted from these large cap values. Oh my goodness, right? Pew, pew, pew. Right? Who's in trouble here? Who's very close to what? Getting fired. Well, at the end of the video, make sure you watch all the way until the end because we do have 5 hot tips for you. So Donald Trump right now is he's kicking butt and taking names. Make sure you watch all the way until the end because some people are going to be fired and some are going to be hired. All right, let's have a little bit of fun here. Right now, it's pretty obvious to me what is happening. We get a bounce off of extreme fear, and now we're going to see whether we get a higher low again. Low, higher low, move higher. That's where people are excited to buy. Low, higher low for now. If it rolls over and we lose 22, well, we probably got the stock market crash. You're like, oh my God, it's like nicer you're telling me now, but stocks have already probably crashed. Yes. So the key factor here, the next thing to watch for in this leg, again, bounce on the 50 DMA, bounce on the 50 DMA, lose it. What we're looking for right here, I'm just going to go back in time. All right, beep, boop. There we go. I'm going to delete it one more time. And what I want to show you is that after we lose the relative low, like right here, that's going to be found here at the relative low, the bounce off the 50. After we print and close below here, that's notably on this day, August 2nd, where we close at 532. Then stock, it's pretty much predetermined we're going to go down. The gap down was for buying, and that gave us energy or for bouncing all the way until here. Now we have something very similar where we have some kind of head and shoulders. We got a shoulder, a head, a shoulder, a head. So we could be going for a short-term correction. The irony here is that if we were to get a correction, which is 10%, people seem to want to argue about what a correction and a crash in a bear market is. I'm not here to argue. I'm here to try to help. So if we were to get a crash, a correction of 10%, we would get a true test of the 200 DMA. On the same token, what would we also get? A bit of a tongue twister there. If we go all the way down to the blue line, what would we have? We would have a test of 10%. Here's where I'm hoping we don't get the crash, but I'm also pretty sober to the idea that we could. At the 3-minute mark, I'm going to come back. Actually, I'll just do this right now. So let's look here. We're looking to the moving average. I talked about this morning. Watch all the way until the end if you want all of the good information, including those 5 hot tips. All right, let's look right here. We have the short-term price on the weekly chart. What do? We don't test it. Until when? Until years later. Where what? We have the exact same pattern. Oh my goodness. Shoulder, head, shoulder leads to knees and toes and a stock market crash. That's a bear market. That's negative 20%. That's painful. Where does it go from? From the blue line to the black line. What did we just talk about on the daily chart? Oh my God. We now have 2 daily closes below the blue line. We could go to the black line. Yes, these are very simple numbers. They're called a simple moving average. And let me see if I can go to the settings here. It's the 50 and 200 MA. So I'm showing the blue and the black line, which correspond with the 2, which is the 50, and the 5, which is the 200 MA. To make it even simpler, short-term price and long-term price. When we start losing these averages, stocks will generally dance between them. Let's look here to the weekly chart. Oh my God, loses it, bounce, retest it all the way down to close to the black line, reject on the blue line, test the black line, test the blue line, test the blue line again, claim the blue line, bounce off the blue line. Oh my God. All right, so now that you're probably a little bit tired of hearing my voice, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So if now we think about that relationship with the blue line here, which is basically home base, spend too much time above, it has to mean revert, right? It has to go above, then below the blue line. Same thing here. We spent a lot of time above it. We haven't really tested the blue line. We have our launch pad here. Poo, right? Yeah, just do it, baby. What happened over here? Poo. woo, right? Just do it. Yeah, massive, massive move. Then when we finally test the moving average, that's it. Like in hindsight, that was the top. Never really knew until we lost the key moving average over here. That same thing could happen here where we're excited as bulls right now. We're like, yeah, Trump's going to save the world. We eventually lose the blue line. It would look something like this. And when we're all the way over here, we're like, uh-oh, spaghetti-o. It's like exactly what happened over here. And we see that in hindsight. So all I'm trying to say right now is that I am receptive to the idea that we could go lower. Why? I have an evidence-based analysis approach. And right now, if I delete everything, what do we have? Let's look at last week's low. Looking at the number up here or the L. So last week's low, 587.66. Where are we right now? We're below that. We're at 586. So what is that? That's more evidence that we're going down. Wow, what does that mean? I'm not used to charts going down. Well, let's flip it upside down. Let's go 1 divided by SPY, because you might recognize this chart here. Oh, this looks like a bottoming pattern. Yes. So if this chart looks like it's bottoming, it means the S&P is going to go down. So right now, I keep talking about closing over the candle high. Now we have an inside bar, which means we are deferring the pattern. Let's go to full, make it a little bit easier to see. So here we have the range, and now we're currently over that previous candle high, which means that the S&P is below its previous weekly candle low. What am I telling you? I'm telling you that we have more evidence the stocks could go down. What can happen now? Well, let's look at RSP, because after we got that second piece of evidence, and then it crashed. Yes, it did. And these ones here are actually looking a lot better than the S&P right now. So what I'm really, really curious about is what's going to happen into the first 2 sessions of the Santa Claus rally, because that's normally how many more days we have into the end of the run. Right now, these magnificent 7 stocks, well, they haven't been so magnificent as we just talked about. And I think I might understand part of the reason why. This is a investor survey from CNBC, and they're telling us that investors think they're going to be higher next year. Again, big caps, they're going to be higher next year, but they're not going to be fantastic. So what are they doing? Well, they're selling first, asking questions later. That's exactly what they're doing. Why? They shaved off more than $1 trillion in market cap from the large cap market values. Oh, yeah, that's the move right here. Let's make it easier to follow along. We're going no group, which just means the biggest companies go to the top left here. Oh, Apple's the biggest, Nvidia number 2, Microsoft number 3. That's right, Nvidia, move over, you fired. All right, measly 3.29 trillion, you fired. Why? Apple's the king, 3.79 trillion. There you go. All right, that's the big guy. Microsoft is currently worth 3.13, right? You're fired. Get out of here. I'm going to have some fun with that over the next couple of years. All right. So if now we understand what could happen, meaning potential, once we get to ingredient number 4, there could be a sudden drop. This is a weekly candle. On the daily chart, what does RSP look like? Oh, it blew out. Oh my God, what happened here? I can't remember. Volume came in though. It could be a climax. If now we look to the S&P 500, what could happen? That could be that now that we have a close below the 50 DMA. 3 full candles in a row means that there's been selling pressure during the session. We could be headed down to the green line. If we delete everything, that's basically just what we have here. It's the move to the 50 DMA, the loss of it, and the move back down somewhere closer to the 200 MA. Could be a headline from anything. It could be Trump, could be something different, could be what we talked about earlier today. Well, what was that? And remember, we still have those 5 tips. So just stay tuned for about, like 60 more seconds here. If we think about year to date, stocks have been terrific, but a lot of people right now are thinking about what's going to do well next year. If I look here to my watch list and I go down here to value names, what do I note? Well, a lot of them are green, right? Green, 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 green. Why? Well, because people are not just selling and raising cash. They've already done that. There's $7 trillion sitting on the sidelines. Right now, they're buying stocks. What are they buying? They're buying this stuff. So that's what I'm paying attention to. Why? Because people usually position going into the next 90 days or the next quarter. There's lots of stocks that are moving right now. They're moving, baby. They're moving. All right. Lastly here. Are the leaders of yesterday going to be the leaders of tomorrow? Well, if they go sideways, that's fine, because a lot of them are currently at new all-time highs. Not all stocks are created equal, though. If we look here to Tesla, where is it? It's back below the previous all-time high. So I hate to say it, but kind of told you so. It might be a warning. I still own Tesla too. Still doing really well on it on my last runner. However, where is true support if we don't hold the previous all-time high? Well, it's not here. There's a small shelf here at roughly 350. Then we're probably looking at 300, but probably closer to 250. That's true support. There's not really a lot of volume to justify the move either. All right. Anyways, well, There's the Grinch. Now let's look at a few other charts like I don't know, like VO. Talked about this one. I quite like it. If we look to a monthly chart, what do we have? Monthly higher low. And this looks really good to me. Looks really good to me because we have the higher low. We're currently over the key average. And it actually gave us quite good feedback today. Closed down by 3 cents. I'm going to discount the price here in after hours because look, it looks like it's all over the place. Negative 3 cents. We also talked about the Russell. The Russell today collectively was actually up by 28 cents. Nice pattern here too. 217.84, 217.85, 1 cent higher low. Oh, yes. It saved the chart. All right, finally, excuse me. If we think about all these names, what could really drive the charts lower in the short term? Well, there's this company called DeepSeek. I've talked about it a couple times now. Really encourage you to Google it, maybe even try it. And here we go. What is it? Basically, ChatGPT that was made for $5 million. NVIDIA talked about a acquisition that cost them $700 million. That might be something we have to worry about for those magnificent stocks, right? Sometimes the horses need to stop, sleep, eat, poop, right? Got to do all those things. So sometimes they're a little bit less magnificent. They're not machines yet. But on the flip side here, there's things to worry about over in Europe too. What is there? Trump's presidency. There's conflict in two regions. And then there's also election interference over in Romania and in Georgia. All right. So what are you really telling me? Well, forecasters thought the S&P was going to fizzle, and it did not. What did it do? It shocked the world. Rah, right? The crowd went wild. Instead, the index surged 23% for the best back-to-back return since the 1990s. What? Gotcha. I gotcha. Why? Because Trump's scorecard is the S&P 500. That's right. And over here, Trump's going to be happy at the end of his term. Please remember, we've talked about our 2025 working theory where click on the link in the description. That would also include, again, I'll give a little plug here. Link for these resources is in the description. And maybe you want to consider subscribing if you want to not miss another video. We do publish videos every day. There you go. On here, small dip, 2, maybe 3%, maybe less. I think that's what's going to happen. Am I going to be right? Hey, we'll find out. So far, market's got me. And Trump should be taken seriously, but not literally, which means there might be some investment opportunities, which is exactly what we're focused on, right? Let's have the happy dance. Let's get the happy Trump. So finally, those 5 ideas that I talked about, I'm sorry for dragging it out so long. 12 minutes is actually a long video now. Before, those used to be very short videos. Anyways, CE on a weekly time frame, which is going to be good on Friday close. Looking for a swing trade, which is up to 3 months. Same thing for MSOS. Right now, we're up by 0.6 and 0.8%. If these alerts hold, they provide an excellent risk reward. 14.7 and 6. We can click on the chart to find out more. And we see that it thinks the chart's going to stop going down and go up. Hey, this looks like pretty good risk reward, right? We stop out here for wrong, for right. Whoa, that's pretty good upside. Yeah, that's why it's 14.74 to 1. Stops right there, targets right there. There's the numbers for MSOS. For Coor, this is going to be on a monthly time frame. This one just closed out. Good for 1 year. 3.52 risk reward. We can look at the chart here as well and just see that it thinks it's going to stop going down. When? It thinks now. It thinks now is the time for it to start going up. Right? Stop going down and start going up. Moz, which is going to be Mosaic. This one's now 1.37 risk reward. But more importantly, I want to focus on this one here, which is PSQ. We had the alert on the 1 day time frame. Now we're getting it here on the 1 week. Remember, I just told you that SH or inverse S&P is also giving us the same signal. So I just personally entered PSQ on my trading system today, which is thealgo.com. So we can find out more about that by going to thealgo.com. You can actually join us for a 45-day free trial. And we're currently offering a up to 47% off discount. Santa's right here. He's like, no problem. Come on down. No Grinch right here. We got our sale on for 7 hours more. I encourage you to go visit thealgo.com if you want to come trade with me. Otherwise, thank you so very much. I wish you all the best into 2025. And thank you very much for tuning in.